What up, fellas?
Hey guys, how we doing? Thanks for having us.
Hang on one second here.
You want me to introduce this one, Josh? I think Josh is just defaulting to me leading all these conversations now because I've just been dominating it before, and I'll do my best to introduce it. So, making Bitcoin programmable, I think the idea of bringing real world assets onto Bitcoin kind of probably pisses a lot of people off, I'm assuming, out there in the Bitcoin market. I think we probably talked about this last time when we were on, seeing where the opportunity to extend and innovate in the Bitcoin world. I'm wondering if you could maybe just recontextualize the opportunity that you see here. Why build on Bitcoin? Why take this huge heavy lift and subject yourself to the slings and the arrows to run at this opportunity?
Well, Jess, I don't know why it would piss people off, because you know what? Like, Bitcoin security budget could be gone in 15 years if we don't figure out a way to save it.
I'm with you, brother.
For nearly 2 decades now, Bitcoin has secured itself through one elegant economic truth, and that's miners defend the network because the network pays them, right? So today, that payment overwhelmingly comes from block rewards, basically newly minted Bitcoin given to miners every 10 minutes. But the block subsidy is disappearing fast. Every single 4 years, it gets cut in half. In 2009, miners were paid, I think, about 50 Bitcoin per block. Today, they earn about 3. And in about 15 years, that's going to be close to 0, right? So how do we actually make sure that the miners get paid so that there's a security budget in order to keep securing that network, and more importantly, maintain its decentralization that people all become familiar with and love about Bitcoin?
I mean, what's the answer to that? Like, how do you make sure miners continue to get paid?
I mean, the answer is definitely not just hope that fees go up or hope that Bitcoin keeps doubling every 4 years. The future is actually building financial primitives and use cases directly on Bitcoin so that people actually have demand for the block space and want to pay fees for it.
Am I wrong as framing this as contentious in some way? Is that sort of a slightly ignorant take from me here, just casting too broad a brush on what I see from Bitcoiners on the timeline? Or is this becoming consensus?
No, I think it's just something that's not necessarily talked about as much because obviously Bitcoin has phenomenal growth and phenomenal acceptance, right? There's, growing corporate balance sheets, and the ETFs is one of the most successful ETFs in history. And there's a lot that takes over the timeline or the headlines in that regard. But, there's the purist, if you will, the guys that are out there saying we got to keep Bitcoin as pure as it can be and not necessarily play with putting data on Bitcoin and changing it in any way. They're very, stuck in that approach, but not necessarily taking into account that ultimate reality, which is, it's rooted in code, and eventually we'll get to that moment where the block rewards are quite low, and Bitcoin miners have to be profitable in order to keep wanting to do it. They can't just lose money forever.
That checks out. All right, Josh, welcome back, man. I think we got you now, right?
Yeah, Jess, Josh, sorry guys, I did a hard reset. Right, you're like, we're going live.
You did have a good look on your face of like, what's going on here before you disappeared. So it all worked out right.
Well, I saw the alert pop up at the top, and I'm like, how do I shut the alert off?
Love it.
Happy to be here, guys.
What are you building? What's sort of
of course. So I mean, my background's in traditional finance. I spent the last 13 years in asset management and lending. I've been early Bitcoin adopter. I started buying Bitcoin in 2013, was very early to Ethereum in 2017, thought smart contracts were going to save the world. Then I started institutional investing in the space, primarily around the tokenization space in 2020, really early in tokenization. And I remember trying to convince people that RWAs were going to be a thing all the way back then. It was obviously at a time when people were like, stop talking about this. And my goal, from an asset management and lending perspective, was how do we bring sustainable yield on chain at scale, right? And the problem is, from a retail perspective, I just don't think people were really ready for it. So when you talk about bringing something like treasuries originally, which I worked on years ago on chain, there was not a lot of interest. Now you see there's, how many billions, hundreds of billions worth of treasuries on chain. Right. So it's really awesome to see this transition that's happened full scale, like in real time. My goal was to bring sustainable yield that can scale in a really healthy way. And the only way I thought to do that was to do it through institutional users. Where is the deepest liquidity and the deepest institutional opportunity? It's on Bitcoin. Right. And so I met Matt, I want to say like 2.5 years ago, when he was doing a seed round with Multicoin. I was investing as an angel at the time, and I actually wanted to come in and invest in Arch. Multicoin took down the whole round, and I didn't get a chance to. I was super bummed. But Matt and I stayed close friends, and I told him, I said, once you're ready to go to mainnet, let me come help you build a yield marketplace, really connecting the fixed income world, which is scalable, which is sustainable, which we can predict the yields that have already been in existence for the last 20, 30 years, printing between 8 to 12%. And we can attach that directly to the new institutional opportunity that exists, which is institutional Bitcoin. Right? Before, it wasn't hundreds of billions of dollars of an opportunity. You had Bitcoin maxis that were never going to separate with their Bitcoin for a 3% yield. It's not going to happen. If you told me my job is to go convince 10,000 Bitcoin maxis to give me their Bitcoin, I'm going to tell you it's probably a difficult venture that I'd head on. But if I got to go convince 10 chief investment officers of an asset management business that's holding billions of dollars worth of Bitcoin to give me their Bitcoin for a sustainable yield that they know that's backed by BlackRock or Fidelity or Franklin Templeton, Apollo, Hamilton Lane, KKR, I'll tell you I can make that happen. And so that's what we've been building at HoneyB, is connecting those rails and utilizing the Arch infrastructure, where we can do everything from borrow, lend, settlement layer, and yield all in one place.
What made you want to build on Arch versus kind of the other layer 2 or kind of programmable Bitcoin?
Well, I already tried to build on the other ones.
Okay, there we go.
No, so I mean, I ran one of the largest tokenization businesses globally. For the past multiple years, we had almost $1 billion token within that ecosystem. We did over 600 million worth of tokenized securities. I'm still actively working with the Solana Foundation and the Ethereum ecosystem partners across the board, the New Horizon pools that are existing. Like, I've been involved in everything you could think of in the tokenization space, worked with every tier 1 asset manager of helping actually bring these assets on chain. It's just still the DeFi ecosystem in Solana or inside Ethereum is pretty attractive for stablecoins, right? You can go get pretty extractive yields, especially when you introduce looping and everything like that. So Bitcoin was the one space where there's really no competition. And then what we did is we set out to actually talk to these asset managers that are now holding Bitcoin on their balance sheet and go, would you like to have treasury exposure or private credit exposure while still retaining your speculative upside on your Bitcoin? And the answer over and over and over again was absolutely, right? So that was the difference where I saw Bitcoin as the opportunity. Digital asset treasury businesses was one of the low-hanging fruit we saw. These things have been struggling across the board, but they're still holding a ton of Bitcoin, and they need to create new value add for their individual, LPs, within the opportunity. So it's a completely different sale process, right? It's like institutional sales direct to chief investment officers to give them sustainable yield while creating some type of principal protected products as a whole. So, because liquidations can't happen really, for what we're building.
Interesting. Okay, the market makes a ton of sense to me. I'm curious where you guys are in the process. I don't see a whole lot on the internet.
Yeah.
There's no X account I can click through to get a sense of what you're doing. Clearly, if you're dealing with investment managers, maybe that's not important. But yeah, I'm curious, what part of the process are you in right now?
For sure. So, I mean, we've had a ton of success. We've kind of been operating in stealth on purpose as Arch is going to TGE upcoming. We wanted to kind of excite everybody to let them know, hey, we already closed a fundraising round. We just didn't tell anybody yet. Hey, we already have hundreds of millions worth of TVL commits in Bitcoin from institutional Bitcoin. We actually plan to be one of the largest protocols for TVL across the board in the top 20 with the first 6 months of our go live date with our current LOIs we're sitting on. And then we're just going to come out with a bang swinging. It doesn't really matter from like a social media perspective because we're not going after retail users, but still is great to have like a good audience, and we understand the value of being like credible as a whole on that end. I think I saw Matt, I was talking to him last night, this group just announced they raised like $35 million and they have 200 followers on X, right? So in the institutional space, it's weirdly common, but we're still going to definitely start making a whole bunch of noise, doing PR, letting people know what we're up to. We're going on a tour. We're going to be hosting events. We're going to be at every crypto event, demoing our product. We actually hired one of the top. I was able to bring over my co-founder is from Optimism. We brought over one of the top guys over there. And then we brought a chief investment officer from a large hedge fund as well to run the asset management side of the business. And he was able to bring tons of talent. I mean, our team is awesome. We're super excited.
Thanks, Matt. Go ahead.
That being said, though, for the retail listeners out there, we do want to be clear, there will be a retail-facing product. So people who want to get some sustainable and loopable Bitcoin yield products, there will be a retail-facing product. It's just the focus for the low hanging fruit is definitely, like Josh said, some of these more institutionally aligned
It's also
chief investment officers.
For us, it's easier once we already have 400 or 500 million TBL. Look at its AUM, but same. For us to go to a retail product, which we've already been building this whole time, and go, hey, is this a safe place for you to deploy capital, a trusted place for you to deploy capital? Where we're not an extractive project. We're looking to be scalable, long-term, sustainable, and be here multi-cycle. We think this is a huge opportunity for asset management on Bitcoin right now.
So what is the market, or where's this yield coming from? Like, what are the specific markets?
Yeah, so it just is a combination of grade A private credit. You have debt tranches, mezzanine style debt. You have invoice factoring. You have cash receivables, and then what we're doing is we're blending that all into like a laddered maturity strategy portfolio where you always have something maturing constantly. So there's liquidity on demand at all times. We're going to include tokenized assets and off-chain assets. Really, right now the problem is you can't get high quality private credit at scale on chain. That's going to change very quickly. I think we're going to see like a private credit tokenization renaissance happening here shortly. So we're working with tokenization providers like Chintai, Securitize. We'll work with all the majors to be able to get access to what's available on chain now. But then really we're going to go off chain to get a bunch of those assets initially. And then our goal will be to work directly with these providers to bring them on chain. That's going to be like our primary focus. But right now, I think total private credit on chain and liquidity profile is not actually that healthy.
Right. So these CIOs would be buying comparable products from other traditional financial institutions, and they just sort of see you alongside that. But because it can be Bitcoin, they could put their Bitcoin to use. This is the product they would use for that. Yeah,
ultimately, we're just like streamlining the process. So let's just say you already have, your favorite asset that you want to deploy into, but you're holding Bitcoin as a chief investment officer. We have a partnership with one of the largest stablecoin providers where you can borrow directly against your Bitcoin, and then you can deploy that to that individual asset manager of your choice that we already have a relationship with. And instead of you having to go through and manage redemptions, go to the subscription agreements, have to deal with distributions to your LPs, do all the paperwork, it's all done all on chain right there for you. And then we kind of facilitate that entire process, really simplifying it for you.
What's the size of this market? How do you conceptualize how big this market can be?
We think it can be massive. Like I think tens of billions in a very short amount of time. And it's not being overly excited because there's really no, like when you look at it right now, we had a conversation just the other day. It's one asset manager, he manages $1 billion worth of Bitcoin, right? And then the day before we had a conversation with one asset manager who manages 12,000 Bitcoin. And these conversations are, can we start with 1,000 or 2,000 BTC? It's not like, can we start with, 50 BTC, right? Okay. So we think,
but how big is the private credit market that's converging on some of this Bitcoin stuff?
It's 100 times bigger than the Bitcoin market. More than that, it's 200 times bigger than the Bitcoin market, right?
What percentage of their stack are they looking to? Like, if somebody go talk to somebody who's got $1 billion of Bitcoin, do you expect them to be rolling 20% of that into something like this, 100% of that? Like,
I think realistically, they're going to start with like 3 to 10%, somewhere in there from our conversations. They're going to dabble with enough that they can actually see the return for their LPs and get them interested in what they're doing. But the real goal is for these people to have somewhere between 30 to 50% of their position in yield-bearing opportunities once it's trusted. And so we're providing this solution that's very unique. Our LTVs are low. We have liquidation protection in place. The goal is to make sure that Bitcoin is never liquidated. It's really, really an important factor. And then at scale, there's high quality private credit with liquid OTC markets across the board. And then a lot of these even private credit providers we're working with directly, they're the ones that are piping assets into the Blackstones and the KKRs and things like that. They're bringing liquidity, they're bringing on-demand liquidity, so that we don't have to worry about this issue that exists right now with these ATSs on chain. The problem with some of these opportunities that we've seen with like ACRED and things like that within these walled gardens is walled gardens don't work, right? We have to have on-demand liquidity at the end of the day if you want to have scalable TVL opportunity.
All right, we started off this conversation talking about a fundamental challenge with Bitcoin, which is its maybe long-term economic stability.
Yeah.
Matt, can you maybe tie what Josh is running at into sort of the opportunity for Arch and the business there, and then ultimately for Bitcoin as a whole?
Yeah, absolutely. And for the viewers that didn't get to see our last show, what Arch ultimately brings is that Solana style programmability and speed into the Bitcoin economy, where you can have this groundbreaking settlement and security guarantees that hasn't existed before. So you can get full types of programmability in DeFi infrastructure that can quite frankly, construct, clear, and settle these complex multi-party DeFi transactions directly on Bitcoin. And where Arch really comes is we can anchor those settlements directly into Bitcoin's base layer, so it can evolve from a passive collateral into an institutional grade financial infrastructure. So the missing piece to all this, and the way that we're constructing our ecosystem, is much more like a financial stack, right? If you look at Goldman Sachs, they've got lending, they've got trading infrastructure, they've got private equity, they've got a bunch of different structured products. Rather than going really, really wide with 80 different applications, we're really focusing on the core primitives that allow Bitcoin to turn into this institutional scale financial rails. So you have money markets, you've got repo markets, you've got Bitcoin settled payments and trading rails, but more importantly, you have these structured products, and that's where HoneyB comes in. You can view them as sort of the structured product desk where people can buy into these derivative assets that have truly sustainable yield. And it's not rooted in these emissionary Ponzi games of network or protocol tokens. It's not, that's the main point, is that we have the ability to actually deliver real yield for Bitcoin. That's been the holy grail that's been missing in the market these days. So we're really excited to have Josh and his team on board and bought into this vision, because they're going to be playing a critical role in that stack.
I'm interested in your takes on, I guess, the sentiment of crypto Twitter today. And Matt, you're probably first party perspective into the kind of heart of the Bitcoin community, and Josh, your perspective talking to institutions all the time. Like, is it all over? Are we going to be fine?
I can talk about it from my perspective. It's so funny. Literally before I got on here, I was like, I shouldn't even be looking at crypto Twitter before I come on this talk. But in the same sentence, I literally watched, or it's like three things down. Like, one of them was, oh my gosh, Arkham's going, BlackRock just sold the most Bitcoin they've ever sold ever. And then three posts down was Goldman Sachs just bought largest amount of Bitcoin ever. And it's like, look, if you believe this asset's here to stay, I believe this asset's here to stay. I think there is a lot of noise in crypto because there's just so much crap that's happened. There's been so much extractive games that have been played in this cycle. And this one was rough. I mean, this one was a PvP cycle like we've never seen. I mean, people just wiped people out for pure greed. And it was really hard to be part of this cycle, I think. When you look at it, started off in the meme cycle, like back half of last year, into the early part of this year, where everybody who invested in any of those memes, that meme culture, that excitement, that community that was being built actually organically, got just absolutely annihilated, all of them, right? And so I think that's really tore the fun out of it. And then you go and you look at the last projects that actually were doing really well, and they're even struggling, even the strong ones that are you look at something like Pump.Fun, which is buying how much of their own tokens every single day, and still the price is going down. And that's a very profitable business, right? I think the revenue meta is back. I think the institutions don't give a crap at all. They just look for opportunity. They're going to be long Bitcoin no matter what, and they're going to seek out opportunity where it lies. So if they think Solana or Ethereum are undervalued, they're going to come in, they're going to buy it, because they have such a longer time horizon for how all this stuff works. You see these big private equity firms, coming in and investing tons of money in all these really institutionally aligned ecosystems. Like Kraken just announced how big of a raise, just yesterday. You think they're raising at hundreds of millions of dollars, at tens of billions of dollars valuation, if people don't think this is going to be the long-term play? No, the institutions are confident. Citadel, Fortress, Goldman, BlackRock, they know exactly where this is going long-term. But is it going to be your favorite meme that's going to do well? Probably not today, but it might do it again in 6 months from now. So crypto Twitter, I think, is just beat up, man. That's what I think. It's just beat up, but it'll do the same thing it always does. It'll be some new thing that's exciting, whether it's privacy or whether it's RWA or whether it's perp dexes, or my goal is to just be like, I'm going to deliver a product that I know people want, right? And I think the goal long term will be that I think retail users will want Bitcoin with yield. So a speculative upside on Bitcoin with yield, abstract all of that process of having to get there away from them, so they can just know that they have a safe product to hold and be able to have that. So that's the retail product we're going to create for the future, more like an Athena style product. And then in the meantime, build really a scalable institutional solution.
How about Bitcoiners? So the Bitcoin whales, retail holders?
They're so confident. All my Bitcoin diehard, any of my friends,
they selling, brother. The whales have woken up and they're dumping tokens on our heads right now.
Well, those are the really huge ones. That's a different story. But anybody I know with over, I consider a Bitcoin whale anybody who owns over 10 Bitcoin. Like if you own over 10 Bitcoin, you're like a Bitcoin whale, in my opinion. So the guys that own 10 to 200, 500 Bitcoin, right in that range somewhere, all of them, I've never seen them more like staunchly confident about where the market is. And none of them are feeling like Bitcoin's going anywhere.
Right. And I heard there was some rumor, I think, is it an Arch token coming soon? I think I heard Josh hint at that, but I don't know if we've talked about that specifically. I'm curious, is that happening, and how are you thinking about how that integrates into your ecosystem?
Well, mainnet certainly is around the corner, and obviously, as a layer one blockchain, the token plays a critical role, not just in the gas fees and settlement fees, but also the economic security of the entire network. So, the token will play, like I said, a very important role in the growth of the network. But we're going to be thinking about this the right way. We're thinking about the financial stack of Bitcoin and bringing it to market in a powerful way. And HoneyB is going to be front and center in that. Atara, our main money market, as well, is powering a lot of the rails behind the scenes for HoneyB as well, because every Bitcoin that goes through HoneyB first goes through the money market to borrow against it. And then, of course, without borrow and lend, with borrow and lend, in order for that to scale safely, you need DEX infrastructure to support liquidations and healthy markets. So all of these things fit together like a nice, elegant puzzle. And of course, you'll have other things like prediction markets and launch pads and casinos and things of that nature. But I think the stars of the show are going to be, DEX, borrow, lend, and structured products, and then we'll start to move into the different areas of the financial stack, which I think is the exciting piece. But we're not going to launch the token before we first prove out that this technology works, because it is differentiated and it's quite unique. And then, secondly, we want to make sure that we bootstrap the economic activity on the chain so that it can really be the star.
So Matt's a good CEO when he's developing political answers, right?
Oh, it's great. He's workshopped this with his PR team. It's great. I will answer your question, but talk about the important stuff. I get it. I love it.
Hey, come on now.
No, it's good. I'm just, there's no shade whatsoever. It is a fun seat to sit in, where I feel, to represent our audience.
Entire community is like trademarked the whole when mainnet and soon, basically as their response.
That's my question then, because I think we've chatted with you twice. Still no mainnet, my friend. Where are we? What's when?
Very soon. I won't say soon. I'll say very soon.
Okay.
We've already done a couple audits, finished those up, engaging a security firm right now to handle a lot of the monitoring and scaling of the network. Just doing some last minute optimizations and benchmark tests to know exactly where we're at in terms of speed and scalability and how much throughput we actually have, which it's extremely high performance chain. We're talking sub-second blocks, 400 millisecond transaction times. So it is going to be a Solana type performance chain. And we're just doing those final last dress rehearsal things, and we'll be ready.
Last time someone said very soon to us, it was 2 hours after the show. So
yeah,
I'll keep my eyes open this afternoon.
We may have unrealistic expectations, but we're all right. I love sort of zooming out here a little bit, thinking long term. Thinking, we all go into building these big products thinking that we're running after the 1000x, right? What's the big shift that we are going to enable here? So I'm curious, from both of your seats, what's the 5-year 1000x outcome that unlocking programmatic assets on Bitcoin?
Yeah, I think ultimately, Bitcoin represents ultimately a hedge against the dollar. You have lots of banks, institutions, and sovereigns out there that are now transacting in Bitcoin rather than T-bills in dollars. And I don't necessarily say Bitcoin is going to replace the dollar, but it may actually replace the rails that the dollar sits on, and provide a way where we could actually transact on a global scale on chain. You don't see these institutions holding necessarily a lot of Solana on their balance sheets, but they're starting to accumulate on their balance sheets lots of Bitcoin because they understand this. It's a very TradFi aligned concept, but I think that's what is showing in the numbers here when they're starting to adopt this more and more. So I think it's going to be a phenomenal thing to watch as more of these TradFi types of things come on chain, and they'll be transacted heavily among institutions, banks, and corporations.
Bitcoin as institutional money. I think that's actually interesting. That I'm not the guy who's going to go spend my Bitcoin because God, I can't even touch it. It's the way that I still have it is because it's not something I can eat into the market at any point in time. But thinking about institutions and sovereigns using it as sort of settlement and money is very interesting. All right, Matt. Well, we've loved following along this entire journey here. It feels like you continue to put this ecosystem together. I love watching sort of the drama within the Bitcoin world, because I think so much of its strength has come from the antibodies that have been grown up there, and also I think it's really hard to. Well, there's some big open questions on the future. I mean, it seems like many more as people are talking about quantum and all this sort of stuff. So, by far from a foregone conclusion that the market and the structure we have today is going to be the one that persists into the future. So,
Jess, it was interesting. One guy said something to Matt. Matt and I were sitting with an investor. He runs a very large liquid fund, multi-billion, and he looks at Matt. He goes, "What makes you think that you figured out how to create programmability on Bitcoin?" And Matt looks back and he goes, "Do you think nobody could ever innovate ever again in the history of something?" And the guy goes, "Fair enough." Right?
Here's my money.
Where do I deposit? Yeah, where do I deposit?
Yeah, exactly. Like you think innovation is done? Like how many times have people thought we're done with some level of innovation, and then the next whole wave sparks an entire new opportunity, an entire new wave, right? And I think that's where we're going to be at with Bitcoin. And I think you can still do that while protecting like the scarcity and the actual like holistic approach that really Bitcoin maxis take. Like you can do both. That's the point that I think Arch is trying to get across is we love Bitcoin. That's why we're here doing this. It's so that we can actually make Bitcoin strong forever. You don't have to do anything with it too. You can leave it in your cold storage wallet for the rest of your life, right? Like we hope you do that.
I mean, I'm a have my cake and eat it too type of guy. I think that's actually like honestly where the opportunities lie in the market today. So awesome, guys. Well, thanks for hopping on. Again, a whole other market that Josh and I continue to get to understand the nuances of through conversations with folks like yourselves. Kudos on the progress, Matt, from our first conversation. It sounds like you guys are approaching another inflection point. So we'll definitely want to check back in and see how you guys are doing in a couple months.
Absolutely. Love to come back. Love the show.
Yeah.
Appreciate it, guys.
Talking to you guys. Appreciate it. Have a good one.
Thanks, guys.